Honda Marine just slashed $10,000 off the price of its outboard engines, and the company called it our biggest offer yet in its own official marketing language. The previous maximum discount Honda offered American boat buyers was $2,000. The year before that, $1,200. Something forced Honda to multiply its largest discount in company history by a factor of 5 in 12 months. And the answer's not in any press release the company has published. The Buyer's Choice sales event, running from January 5th through May 31st, 2026, is not a promotion in the way Honda wants buyers to read it. The structure of the offer, the engines it excludes, the buyers it refuses to cover, and the exact geographic line it draws across the North American market all point to a financial emergency that the company has been working to disguise as a spring sales event. The reason Honda is bleeding $10,000 per engine to move inventory in May 2026 is buried in 3 separate documents. And once they're read side by side, the offer stops looking like generosity and starts looking like something else entirely. The discount math is the first place the disguise breaks down. Honda's Spring into Savings promotion, launched in December 2023, capped instant rebates at $1,200 and ran for 4 months across the slow winter retail period. The Cruise into Summer promotion in June 2025 raised the ceiling to $2,000 across the BF40 through BF350 range. Fall 2025 brought another $2,000 cap paired with 7 years of coverage protection, which the company branded as the Dive into Fall event. Every Honda Marine promotion across 24 consecutive months, from late 2023 through late 2025, held the maximum instant savings between $1,200 and $2,000 per engine. The January 2026 launch broke the pattern in a single day. $10,000 in instant savings, or alternatively a 36-month Honda Care Protection Plan valued at up to $4,460. The choice belongs to the buyer. Honda's marketing copy reads, "Our biggest offer yet," and the company's not exaggerating. The 2026 offer is 5 times larger than the 2025 ceiling and 8.3 times larger than the 2024 ceiling. A discount of that magnitude does not appear in a quarterly marketing review because someone at corporate decided to be more aggressive. A discount of that magnitude appears because finance has run the numbers and confirmed that not running the promotion would cost the company more than running it. The Buyer's Choice framing is the second tell. Honda's not telling dealers which incentive to push. The buyer chooses between cash or coverage, which means Honda has no preference for how the inventory moves as long as it moves. A company confident in its product positioning steers buyers toward the offer that builds long-term loyalty, which is the protection plan. A company under inventory pressure lets the buyer take whichever option closes the sale fastest. Honda chose the latter. The engines covered by the promotion reveal the operational truth Honda's fighting. The promotion applies to the BF40 through BF350 range exclusively. That is the volume tier of Honda's outboard lineup. The mid-range and high-power 4-strokes that compete directly against Mercury's 75 through 350 horsepower range and Yamaha's F70 through XTO 450. The portable 2 through 20 horsepower outboards are excluded. The M300 McLaren tuned performance variant is excluded from the protection plan extension. Government, fleet, rental, commercial, demo, tournament, and brand ambassador engines are all excluded. The pattern in the exclusions matters more than the inclusions. Honda's not discounting the engines it has plenty of demand for. The portable lineup ships through retail channels like West Marine and faces less direct competition because the portable segment is fragmented across many small manufacturers. The M300 is a halo product Honda built with McLaren engineering to claim premium segment credibility, and the engine sells through a controlled boat builder network rather than the general dealer floor. Both of those product lines are excluded from the largest discount because Honda does not need to move them at a loss. The BF40 through BF350 range is where Honda's inventory pressure lives. The 2021 and newer eligibility cutoff in the fine print tells the timeline of the problem. A 2021 model year engine sitting on a dealer floor in May 2026 has been in inventory for somewhere between 3 and 5 years. Honda's required cleanup window of unsold units stretches back to the immediate post-pandemic period, when manufacturers across the marine industry built inventory in anticipation of continued boom year demand that never arrived. A boat dealer carrying 10 BF250 engines at $25,000 retail is sitting on $250,000 of inventory. Wells Fargo Commercial Distribution Finance, the primary marine floor plan financing provider for American dealers, set its base marine floor plan rate at 10.58% in March 2025 and held it at 10.04% through December 2025. That dealer is paying $25,000 per year in floor plan interest on those 10 engines alone. The $10,000 instant savings becomes the difference between unloading the inventory before the 2027 model year arrives and continuing to bleed financing charges through another 12 months of stagnant retail. The competitive landscape that produced the inventory pileup centers on a single American factory in Wisconsin. Mercury Marine builds its complete 75 through 600 horsepower outboard range at the Fond du Lac facility, which makes Mercury the only major outboard manufacturer producing engines on U.S. soil at scale. The implication for tariff structure is immediate. Mercury pays zero import duty because there is no import. Every Mercury outboard delivered to an American dealer ships from Wisconsin and crosses no border. Brunswick Corporation, Mercury's parent company, reported first quarter 2026 earnings on April 30th, 2026 that exposed exactly how much that advantage is now worth. The propulsion segment generated $571.3 million in revenue, a 17% increase year over year. The disclosure that drew industry attention was the boat show share data. Mercury captured 70% of all outboard share at the 2026 Miami International Boat Show in February. Overall outboard market share for Mercury at the show landed at 60%. The on-water share, which measures engines actually rigged on boats and demonstrated to retail buyers, hit 84%. The 84% on-water number is the more revealing of the three. Boat builders who display their products at Miami choose engine packages based on what they believe customers will buy. When 84% of those displayed boats are rigged with Mercury, the boat builder community has already moved to the American-made option. The trade attendees who walk Miami are dealers, marina operators, and serious buyers. They return to their home markets in February and March 2026, with the boat builder consensus already shifted toward Mercury. Honda's Buyer's Choice promotion launched January 5th because Honda's market intelligence team had already seen the boat builder commitments months earlier. Yamaha, the other major Japanese outboard manufacturer, faces the same tariff structure as Honda but has responded with a fraction of the aggression. The Yamaha Real Reliability event running May 4th through May 31st, 2026 offers a 24-month Yamaha extended service contract on 30 through 450 horsepower engines, or up to $200 in dealer credit on portable 2.5 through 25 horsepower outboards. $200 of dealer credit versus $10,000 of instant savings is not a small gap. The gap reveals two different strategic responses to the same problem. Yamaha is protecting margin and accepting some market share loss. Honda is sacrificing margin to defend share. The two approaches reveal something about each company's read of the situation. Yamaha believes the tariff pressure is temporary and customer loyalty is strong enough that buyers will accept higher prices through the season. Honda believes the share loss is permanent if not stopped immediately, and that buyers will switch to Mercury without an extraordinary incentive to stay. One of those two assessments will prove correct by the end of 2026, and the difference between them represents hundreds of millions of dollars in long-term U.S. revenue. The trade policy that produced the asymmetry started with a Trump administration announcement in April 2025, imposing a 24% tariff on Japanese outboard imports as part of broader trade pressure on Tokyo. Industry publication Boat Test reported in June 2025 that the marine industry worldwide is essentially paralyzed while waiting for a US-Japan trade deal to take shape. The paralysis ended in late July 2025 when the administration announced a comprehensive agreement with Japan reducing the tariff on all Japanese imported goods to 15%. The 15% rate took effect on outboards in the August 2025 import cycle. Honda's public response to the deal came through a statement that the company would eat any tariff for the time being, given it has the ability to do so. The statement also conceded that Honda might change the policy if conditions required. The buyer's choice sales event is the operational definition of eating the tariff. Every Honda Outboard above 8 horsepower is manufactured at the Hoso Outboard engine plant in Japan. The Hoso facility produces 21 Outboard models on a single production line for the BF8 through BF250 range, with the BF350 V8 assembled on a separate dedicated cell line by a specialized team. Every engine eligible for the $10,000 discount paid the 15% tariff at the port of entry before reaching an American dealer. The wholesale value of a Honda BF250 sits somewhere between $17,000 and $20,000 depending on configuration. The 15% tariff on that wholesale value runs between $2,550 and $3,000 per engine. Honda is offering up to $10,000 in instant savings on engines carrying $2,500 to $3,700 in tariff cost. The discount absorbs the tariff entirely and provides another $6,000 to $7,000 of additional price pressure designed to compete against the tariff-free Mercury alternative on the dealer floor. The dollar math becomes more revealing for the BF350 V8. The flagship engine retails near $35,000, which puts wholesale value somewhere around $25,000. The 15% tariff cost is roughly $3,750 per engine. Honda's $10,000 offer covers that tariff plus an additional $6,250 of discount intended to keep the BF350 competitive against the Mercury V10 400 horsepower and the Mercury Veredo V12 in the high horsepower segment. Honda invested heavily in BF350 development for a 2024 launch, and losing market share on that engine after one full sales year would erase the strategic positioning the launch was designed to establish. The forward question is what Honda does on June 1, 2026 when the promotion ends. 3 paths sit in front of the company and each one carries a different strategic message to the market. The first path is extension. Yamaha already demonstrated the playbook by following its January through March 2026 Ready for Reliability event directly into the May 2026 Real Reliability event with a brief 2-week gap between promotions. If Honda extends the $10,000 offer into the summer with a renamed event, the signal to dealers and to consumers is that the tariff pressure is permanent and the discount is the new operating reality. That signal would compress Honda Marine's gross margin on U.S. outboard sales by roughly 15 to 20% on every engine sold, which on a typical annual U.S. volume of 40,000 units in the BF40 to 350 range translates to approximately $300 million of reduced earnings annually. The second path is restoration of pricing. Honda could let the promotion expire on May 31st and raise MSRP to absorb the tariff through retail price increases starting in June. The decision would transfer the tariff cost from Honda's margin to the consumer's wallet, which is the textbook response to a permanent import duty. The same tariff applies to Yamaha and Suzuki outboards equally, so the entire Japanese category would become more expensive in coordinated fashion. Mercury's price advantage on Wisconsin-built engines would expand by the full 15%. The Brunswick earnings projection for full year 2026 already factored in continued share gains, and a Honda price hike on June 1st would accelerate the projection. The third path is the one Honda's leadership team would prefer to discuss only in closed-door meetings. The BF40 through BF350 range could be quietly de-emphasized in the U.S. market, while Honda focuses the American business on the M300 McLaren collaboration and the BF350 V8 flagship as premium segment products. The volume engines would remain in the European and Asian markets where the tariff does not apply, and the U.S. market would receive a narrower lineup positioned against the premium tier rather than the volume tier. That outcome would represent a structural retreat from a market Honda spent decades building, and the biggest offer yet would be remembered as the final fire sale before the strategic exit. Honda Marine's leadership in Kennesaw, Georgia is presenting Buyer's Choice as a spring promotion and a celebration of Honda's relationship with American boat buyers. The internal documents, the engine exclusions, the geographic targeting, and the dealer inventory restrictions tell a different story. Watch what Honda announces in the first 2 weeks of June. The replacement promotion, the silence, or the price increase will reveal which of the three paths the company actually chose. And the answer will define whether Honda Marine remains a serious presence in the American recreational boating market through the end of the decade. The $10,000 is not the story. The $10,000 is the receipt.